Good morning, ladies and gentlemen, for Bitcoin Treasuries World episode 53. It is good morning from the West Coast of United States, Los Angeles, California. West Coast is the best coast, I heard many people say. Brian, good morning to you. How are you?
Morning, doing well, and happy to be back on the show talking about H100. We've got a few developments to talk about, and as I'm sure many questions about what's happening in the market currently.
Absolutely. A lot of things are happening. One of them is sentiment. And one of the things that I invited you onto the show to discuss is also different tools to be used for someone like H100 that at different mNAV levels. So why don't we start out with just you sharing whatever you think that investors or the community should be aware of, anything, latest developments, whatever you think is a good place to start.
I think could we start with the slides and then go on to some questions after that?
Absolutely. You want me to put on here the Svalbard slides? So if I go like that, then we can see the awesome H100 logo that I found out that Sander actually created himself. But we'll do like that so we can see the slides better. I just wanted everyone to see that beautiful logo. I'm glad I complimented that logo heavily before Sander. When I asked him who made it, he said it was himself. So yeah, let's start with the slides. Good morning, Christina. Cheers to you.
Good morning, Christina. Yeah, so Operation Svalbard, we recently announced our 21 steps to strengthen H100 at the intersection of Bitcoin and longevity. So without further ado, I will just start working through these steps and talk a little bit about what we have planned upcoming. So generally, we have organized our 21 steps around 3 different pillars. And what we're looking to now is we've achieved 0 to 1,000 Bitcoin. How do we get from 1,000 to 10,000 Bitcoin? Well, there are some things that we need to do, additionally to get there and to operate at scale. So the 3 pillars, we're organizing our activity around our capital markets, and with a heavy focus on things that are going to enable liquidity. And also with liquidity comes funding, and we'll talk more about that as I go through these slides. Fundraising, investor relations, really the name of the game now is scale. We've relied traditionally a lot on private placements with family offices and high net worth investors, and they'll still be important moving forward, but for our next steps, we need to get more institutional involvement, and that's where a lot of our focus has been lately. Growth and ecosystem, we're not just about institutional investors. We also want to make sure that we're bringing retail investors along the way, and so we want to make sure that we are, communicating what we're doing to the market, expanding our reach, so that everybody knows what's going on with the company, and we're also continuing to build up products that enhance our ecosystem. Okay. So for capital markets, the steps we're working on, we're adding global institutional partnerships. One of the things that is not really apparent from the outside of Bitcoin Treasury Company is how much back office work there is to do just to execute deals, especially when you're doing cross borders deals. It kind of makes you realize how much we need Bitcoin. Just because some of the complexity involved. So, work under progress there. One of the things we announced recently that I want to highlight a little bit here is our transition from K3 accounting to IFRS reporting. And this sounds like just a boring, ordinary accounting issue, but it is not. This is actually a very important step. It unlocks other steps on a roadmap. And I can't say what those are until we publicly disclose them, but if it's something you want to think about, what does IRS reporting enable? Those are the things that we could conceivably be working on right now. And in terms of capital markets activity, we're currently exploring different instruments. We want to make sure that we have instruments that we can work with in different market environments. And I'm sure we will talk more about that later, since that's one of the issues you explicitly wanted to cover. We have been working on a tokenized Bitcoin denominated convertible bond offering on the Stalker platform that is still under development. We're also looking at how we can do more Bitcoin-denominated products globally. One of the interesting things about the regulatory situation is that normally being in Europe is not a regulatory advantage, but it turns out it is for Bitcoin-denominated convertible bonds. There are a lot of jurisdictions where they can't be offered, so we're currently exploring options for what we can offer in other jurisdictions. Notably, the United States is one of those places where you don't see tokenized, or you don't see Bitcoin-denominated convertible bonds because there isn't a regulatory pathway to getting it done here yet. And we're also working on structured equity tranches is part of the way we do some of our fundraising. We also are working on an ATM-like program. And we have also a Nordic offering that we are developing, which would be a new type of program that has never been done before. Unfortunately, the nature of public companies is we can't share the details of it until we've put out a press release and publicly announced exactly what the plan is. But these are some of the things that we are working on behind the scenes. And so for our, everybody wants to know when are you going to raise capital? How much are you going to raise? When are you going to raise it? When are you going to tell us about it? And as a public company, you always have to keep these things a little bit close to your vest for disclosure rules. We have two initiatives that we're working on that we have nicknamed Operation Thunderbolt and Operation Merkle. And we hope that at the fruition of these projects, they will not just be incremental changes, but material changes to Bitcoin holdings. And for fundraising and investor relations, as I mentioned, that in the next stages of our growth, we really want to focus on institutional development, and the communication channels that you get to institutional investors with is a little bit different. With retail, you go on podcasts, you go to conventions, and that is where a lot of the media is consumed. For reaching institutional audiences, we're trying to work on more conventional means of communication, such as independent analyst research coverage. We're planning a global end of year roadshow with a lot more of one-on-one meetups, and also we are also looking to expand the lineup of conferences that we attend, where the focus is bringing in institutional investors. For growth and ecosystem, what I would say is that equity markets are global, but fixed income markets are local. And since our investor base is global, we need to make sure that we are reaching people wherever they want to be reached. So we are looking to expand relationships with Bitcoin Treasury podcasts such as yourself, and cultivating more relationships with traditional financial publications and traditional media. And also, really, how I got started in this whole space was writing content about Bitcoin Treasury companies. Like there's an ongoing need for educational content. I first started posting, I would see Michael Saylor, he would put out a press release saying we just did this convertible bond, and the comments would be like, okay, what does this mean? And so that was a light bulb moment for me, saying, okay, well, people need this explained to them and in ordinary everyday terms. And so one of our objectives is to put out content to really make this all understandable to ordinary everyday people. Growth and ecosystem, liquidity is lifeblood. This is something I've been saying for a long time, and I think it's commonly well known that liquidity is everybody wants liquidity in their stock, but Bitcoin Treasury companies especially want lots of liquidity, because if you're going to run an ATM, you need liquidity. If you want to attract larger investors, you need liquidity. Even if you just want to sell a convertible bond, you need liquidity, because they're actively going to be, if you're selling a conventional convertible bond, they're going to be actively trading that. And so, part of the focus there will be adding new trading exchange partners, and other ways to get liquidity into the stock, such as launching a tokenized stock offering. And the capstone event of our plan is we're planning to host a think tank at the intersection of Bitcoin and health in January in Svalbard. Svalbard is very far north. It's one of the northernmost places in the world that you can go. It is deep in the Arctic Circle. And this will be, I think, a really unique event that will be limited to 50 people.
Sorry to interrupt you, but do you realize how cold it is up there?
It's going to be very cold. It's going to be in January, and the sun
It's going to be a great
is
experience. Sorry, I just had to. I don't want to interrupt you, but I have to interject there. Go ahead.
Yeah. Well, it's going to be at the time of the year when actually the sun never shows, and so there could be opportunities to see the northern lights. There will be polar bears. You're actually not allowed to leave town without a guide because you need polar bear protection. So it'll be a very interesting experience. And that is our Operation Svalbard public roadmap in a nutshell. Lots of things that we are working on. Some of the common questions I've gotten is this a sequential roadmap? No, it is not. There are some steps that depend on others. Sort of like I mentioned that IFRS reporting is a step that unlocks other steps, but in general, we're working across multiple steps in parallel, and we have large ambitions. And unfortunately, we're not able to share a lot of the specifics until the operations are fully complete. But we hope that people will be pleased with what we're working on.
That is.
And so.
Yeah, go ahead.
Yeah, so I will end the slideshow there and turn it over to you for commentary.
for Q&A and commentary. No, so that's that looks really and sounds really interesting, Brian. A lot of things there, I guess you guys are working on to do what you can to dig your way out of the current sentiment downer that most treasury companies, if not all, are in, maybe with the exception of Strategy that has held on to their mNAV incredibly well. They also had less to lose there, maybe, but so a lot of initiatives there. Tokenized converge you mentioned. Tell me the thoughts behind that. Why looking at that? I am guessing it makes it easier for smaller investors to participate in giving you convertible debt, essentially. But explain why that makes sense.
Yeah, well, for just in principle, we think as a Bitcoin company that it behooves us to contribute to Bitcoin native finance. And normally, when people think about tokenized stuff, they think about something running on Ethereum or Solana. But that this is not that. The Stalker offering runs on top of the Liquid network, which is co-developed by Adam Back, who is one of our prominent backers. And so we think it makes sense to contribute to Bitcoin native finance, and also you do still have to be, the European equivalent of an accredited investor
Okay.
when that offer becomes available. But one, contributes to Bitcoin native finance. Two, the conventional convertible bonds they're not very liquid. They're very difficult to trade. Doing this on a tokenized platform gives a little bit more flexibility with what investors are potentially able to exit those positions so they choose, and also just the nature of a Bitcoin denominated convertible bond. It's a really different animal than a conventional convertible bond. That's a conventional convertible bond. They're bought by market neutral funds. They're bought by institutions that don't necessarily care about the company, don't necessarily care about the Bitcoin. What they're attracted to is the volatility that Bitcoin brings with it and that the stock has, and they're gamma trading the volatility. And that's what's in it for them. A Bitcoin denominated convertible bond is a little bit different. It's targeted more at people who want to be long Bitcoin, and they are also subscribing in Bitcoin. So logically it makes sense to explore doing this on chain, and those are some of the reasons why we think it makes sense.
Right. I mean, I definitely see the fact that it will, even though people would have to be accredited investors at a European level, it still allows, I think, for smaller investors than being Tobam itself, for instance, or being Adam Back, for that matter. And then there's the advantage of this debt, then these tokens trading 24/7, unlike the traditional legacy finance system, which trades what 30% of the time of the week, or 20% in total when you look at all the hours, right?
Yeah, and most convertible bonds, they're not even listed. So if you want to resell it, it's it's going to be a private offering. It's it's not just a token that you can go try to trade. It's you've got to find a private buyer. You have to engage in the selling process yourself. It's it's a completely different animal.
Okay, so loving that, and I presume it's a way for you guys. You're doing it because you want to be able to take on more leverage, right? You want to be able to, in an easier way, in a more attractive way, offer convertible debt to investors, so you can take on leverage at all times, or in particular at certain mNAV levels, or whenever your leverage is low, or when will you use this lever?
Well, I wouldn't want to paint like a firm line in the sand and say this is exactly the end we'll issue it at. So, but in general, we would want to issue it when it's accretive, so you can kind of run the math. If you sell a convertible bond at a premium, that there's a certain range within which that makes sense in terms of mNAVs. The whole point of convertible bonds versus just selling equity is that you're able to sell it at a premium. It gives optionality to the bondholder, and they have some downside protection. That's one of the things that's in it for them. And with a Bitcoin denominated convertible bond, the idea is that it's made for someone who wants to be long Bitcoin. So their downside is Bitcoin performance. So less a tiny percentage should the bond not convert. And the upside for the company, of course, is that if the stock outperforms Bitcoin, it's a win-win for both the holder and the company. The company gets to keep the Bitcoin. The bondholder, they realize the gain above and beyond Bitcoin on their bond, and everybody's happy.
Gotcha. And what is your current leverage level at in H100? You have 1,060 something Bitcoin, I believe.
We have. Yeah, that's right. Our
yeah, it's right here. 1,046.66. Yeah, it's the Bitcoin you have.
So our leverage ratio is it fluctuates a little bit, but it's right around 30% currently.
Okay.
Because we have tranche 7 of our the first. A lot of people think all we ever did was private placement equity raises, but that's actually completely not the case. About 2/3 of our funds are raised through convertible bonds, and most of them have converted already. Because the way we did it was a little bit different. We had pretty aggressive conversion rates for the company, and currently what we have outstanding is tranche 7, which is around 342 million SEK. I don't have it in front of me right now, but and our current Bitcoin NAV is 1.09 billion SEK, so that works out to around 30% leverage ratio.
Gotcha. So that's at probably at the higher end of different current treasury companies, but when Bitcoin moves up, I strongly believe that's a when and not if. When Bitcoin moves up, then that plays into your advantage in terms of you should be able to move up faster and present more value to shareholders. Would you say that's correct?
Yeah, in principle, if a leveraged Bitcoin position should appreciate faster than a non-leveraged Bitcoin position. It's being a share price. This is not a forward-looking statement about H100 stock price, but just in principle, a leveraged Bitcoin position should appreciate faster than a non-leveraged one. That's just normal market mechanics.
And if this debt is Bitcoin denominated, it also means the downside is protected, because worst case, we're talking about handing back Bitcoin, but not putting you with a fiat debt that you can't pay back. Is that correct?
Yeah, well, I should clarify that our existing convertible bonds, they are fiat denominated.
Okay.
The Bitcoin denominated convertible bonds we are exploring, that the worst case scenario is that the Bitcoin gets returned. And unlike a normal convertible bond, if the debt comes due and you're below the conversion price, you have a very messy refinance you have to go through, and it's typically the reason why that would happen is because Bitcoin itself is probably not doing so hot, so it's a difficult refinance in a time when nobody wants to do refinances. So that's the tricky part with a fiat convertible bond. That's why they're always done, typically termed years out into the future, because as people well know, if you've been in Bitcoin for 4 years, you've typically not only not lost money but done quite well. And so a typical convertible bond is structured with a time horizon that has that in mind. A Bitcoin denominated convertible bond, there's really very minimal downside to it for the company. Because there's no situation where you're going to get caught in that refinance. Worst case scenario, you returned Bitcoin that you wouldn't have had otherwise, and it's a very clean structure for this type of company.
Gotcha. So I noticed also in the presentation that, before I go to my next question, why don't we just, if there's some of these that, there's some questions there from the comments. Guys, first of all, thank you for what we're looking at currently, almost 200 live viewers across YouTube and X. For many shows, I'm not getting the chat feed from X over. If you're asking any questions there, sorry, I just can't see it or put it on the screen or ask the question to the guest. I'm only being fed the YouTube chats. Not that I want to force you over there, but just saying it as it is. But if there's any of these questions that you want to just take a stab at, there's Marcus here asking, are you currently looking to build more tranches with private equity like H100 did in the path from 0 to 1,000 Bitcoin?
So we are thinking to include tranches in the way we structure upcoming offerings. Of course, any specific offering I can't comment on yet, but it's definitely in mind for how we do capital raising in the future.
All right. And then there is Farmering Sats. Hi, Anders. Can you ask Brian what the day-to-day communication channel looks like in H100 given the international team?
Very interesting question. Yeah, I mean, we're on Slack, we're on email, we're on all different kinds of messengers. So it's
yeah, no, that's I think you're answering the question, but the way I thought of it was that it might. No, I guess that is the right interpretation of the question. I think I was thinking of how to get hold of H100, but I know you're accessible on X if people reach out to you with a reply or a question or something, I'm sure. And then there's a couple of others. I want to read those first before I throw them up. Just I never know what's in there. But Hodl Humbly here says, smash that like button, LFG. And then there's stuff that is translated into gibberish when there's smileys. Thank you, Hodl Humbly. What I will say is none of what we say here is financial advice. It is financial entertainment, hopefully, and financial education and information. If you do like it, do feel free to hit the like button and subscribe on YouTube or follow on X. There'll be much more content in the Bitcoin Treasuries space. Moving on to one other thing I noticed that you spoke about, Brian, was a Nordic product that is in the offering that is limited, what you can say now. Obviously, you're a listed, publicly traded company, but Nordic makes me think. Obviously, I am Nordic myself, being a Viking descendant, proud Viking descendant from Denmark. And knowing that Denmark has one currency, Sweden has one currency, Norway has another currency. So if you're talking a Nordic product, are you taking into account and potentially offering something, and then there will be some kind of currency risk on one side or the other in terms of any type of product there? What can you say in terms of, will there be different currencies involved? Is this something that is catering to Danish currency thinkers, so to speak? Norwegian?
Yeah, it's tough to talk without giving too much away, but it
I had to try.
yeah. Yeah, so yeah, there would be, potentially some currency conversions involved. It's it's not necessarily an offering that would specifically cater to different currencies. I think that's really as much as I could say about it. But
Because I'm just thinking, like, how does it become Nordic and not just Swedish? Because you're Swedishly traded. This is the Swedish svenska krona, as it's called, the Swedish currency. But yeah,
yeah, how does it
have
become
you?
so? Yeah, maybe we could just say, how does it become Nordic? Just because of the regulatory infrastructure, the geographical area we can offer it in is the Nordics. Just because of the mutual cooperation agreements among those countries, the way this would be put together, that's jurisdiction we could offer it in, and it probably wouldn't be something we could offer Europe wide or internationally.
Right. And interestingly, growing up in Denmark and being interested in investing, always looked up to, NASDAQ was this, the magic exchange in US, the big one with all the interesting names. And NASDAQ decades ago bought the exchanges in both Denmark, in Copenhagen, and in Sweden. And I don't know about Norway, but there's, I think it's the same exchange ownership. Not that it necessarily makes a difference, but the
Yep.
Svalbard sounds obviously really, really interesting, and that I presume is an invite-only event. I think Sander said last time you guys were on.
Yeah, it's likely going to be invite only. Registration for it is not open yet. But it's something we will talk about more about when it does open. But it's going to be limited to 50 people. So
Oh, okay, just 50 people.
Yep.
50 people in saunas and with shotguns walking around, and it's forever dark, and there's Nordic light. It's going to be magnificent. What will it take to get invited to that? I'm presuming we're talking institutional investors, convert bond buyers, etc. What are we looking at? What's the criteria?
I mean, there isn't exactly a set criteria, but just people who think people who would be good to have on this trip, people who think will make good contributions. Because part of the value of the trip is not just the trip itself, but the other people who are on the trip. So the goal really is to bring together like-minded people who can have a chance to connect and discuss the future of Bitcoin and of health.
Gotcha. And I think that's interesting. And then I noticed Sander was talking about that from the beginning, about the longevity and health and Bitcoin. And yes, Bitcoiners see that overlap and have done for a while, I think, when you go down the Bitcoin rabbit hole, which you may not be so thoughtful of or aware of when if you came into the Treasury investments from the TradFi side, but people that came from the Bitcoin rabbit hole see that. But how will it be not just a fancy, nice, popular thing to say longevity and associated that with H100? I know there's some health products there, but how will it materialize for H100 in clients or investors or whatever? How will you make it more than buzzwords? And you might already have done that. I'm just, being the critical interviewer here.
Sure. Well, I think there's specific health, related events planned for, on the itinerary. So, part of the itinerary is various, items related to health. We haven't publicized the itinerary yet. but that'll be part of what the connection to health is, and it's not really intended as a conference. It's more intended as a networking and unique experience for for people for like-minded individuals who are interested in the future of Bitcoin and longevity to discuss. I know that sounds kind of vague, but that's the general intention.
No, I think that's fair enough. That's where you're at. So my next question would be: is that something that what comes out of that something that we can expect to see trickle on to the rest of us in terms of like whatever thoughts or ideas or is coming out of that? Is that something that will the rest of us will benefit from, some of those maybe inspiration in terms of how to stay healthy, how to live long?
Well, I think people don't realize how much of a interpersonal business that running a Bitcoin treasury company is. So, and when everybody's remote, everybody's distributed across the world, it's really important to make those personal connections. And I think really the benefit to the broader shareholder community is that having the opportunity to sit down, to connect, and to discuss the needs of shareholders, the particular exposure preferences different groups might have, just different views on the marketplace. That type of conversation needs to happen a lot, just to keep everybody aligned on where the vision is going in the future, and to make sure that we're putting the right types of products out to market that investors are interested in participating in, and to make sure that we are doing the right things to keep Bitcoin per share moving up. And all that just requires lots and lots of talking to people, reading the market, understanding where people are at, and putting that all together into a cohesive plan.
Okay, gotcha. So a question from Ariel Figueroa. I'm sorry if I butcher your name, Ariel. I think at least I got your first name down there. I did see it. I just wanted to read it first before putting it up. It's not like Toxic Happy Hour that I did on this channel with my good friend Pablo Lord 5 years ago, where I would just throw everything up. It was a kind of different kind of show. Same background though. Poppy used to have that broken closet. That was a meme back then. But Brian, Ariel asked, given that H100 trades on the NGM, which is the Nordic growth market, many international investors use the OTC ticker HOGPF. Are there plans to sponsor or upgrade the US OTC listing to improve liquidity?
The best way I can answer that is it is a common and well-known path to do uplistings to improve liquidity. In terms of what I can publicly say about our plans, I can't publicly comment on any specific uplisting we might do until we actually announce it. Unfortunately, that's one of the things that you can't talk about until you actually do it.
As a publicly traded company, especially not on just on a podcast, anything important would have to go out as a press release, I presume. And Cage also has a comment there. I'll just throw it out on the screen. Further, you mentioned in the presentation building relationships with the stakeholders in H100, and you mentioned also podcasts. So my question, Brian, is: does that mean that maybe I can get some H100 merch? So I don't have to wear the hat of the name of my original show that I started a year ago, which was MicroStrategy Mondays, which then later blossomed, if you want to look at it that way. I like to do that to these other treasury companies that I do find interesting, like H100.
I do think that it should be on our roadmap to produce some very nice H100 hats. So, we'd be happy to get you one if and when we get those produced.
I got you. And I've actually been thinking, because it's my friend doing these hats here in LA. He does a great job. He's also done my Meta Planet hat and or cap, and I've been thinking of doing that. It's just time and being productive. But I'm thinking of putting some hats together for the different shows. And H100 Happy Hour is is one of those shows. All right, let me see. Well, I do want to go into, while I check out what else is there. I see an old good friend there in the chat as well. Before I throw anything else on the screen and ask you guys questions, what I really wanted to talk to you about today is the tools at different mNAV levels. Now, everybody knows if the mNAV is 1.1 or higher, it's easy peasy. You hit the ATM and essentially buy Bitcoin at 10+% discount. That's a no-brainer to generate shareholder wealth and grow the sats per share in the company. Around one, I think, I do want to hear your thoughts as well, but I'm presuming it's what you're already doing with having leverage, which in the company, which theoretically speaking means that when Bitcoin moves in the right direction, which is up, then the stock will move faster. So that's the nature of leverage position. The beauty of a leverage position within an equity like yours is there's no risk of being stopped out. Is that correct? Your debt can't be stopped out at a certain low Bitcoin price level. It's
right. It's unsecured debt. It's not a collateralized loan. So there's no price at which Bitcoin could go below that would cause us to be liquidated, because the debt isn't structured that way. The worst. Yeah, and that's, of course, you do have to consider the maturity, but that's, we're not there yet. Nobody has their debt structured such that they have a lot of recourse debt coming due next year. That would be an insane way to do it. But to go back to your original question, what do you do with different mNAV levels? Particularly, if you're around one, it's a big question people talk about lately. And really what you do is you try to find ways of raising at a premium. One of the ways to do that is convertible bonds. Another way to do that is, preferred stocks. Some people have had discussions about, if you dip below one, do you sell your Bitcoin to do share buybacks? And I think some of the conversation around that is I find a little bit paradoxical. People are really excited about share buybacks at 0.9 mNAV, but mathematically that's the same as doing an ATM at 1.11 mNAV, which a lot of people are not excited about. So to really for selling Bitcoin, to do share buybacks, to be really accretive, you would need to do, say, you'd have to be, I think, trading at a very steep discount, something like 0.5x mNAV. 0.5x mNAV, you sell Bitcoin to do share buyback, that's the equivalent to doing a 2x mNAV ATM. Now, whether you would actually want to do that is another question. I think any Bitcoin treasury company that thinks about doing this should do it, should proceed very carefully and anyway, it's something you would want to do well considered before you do it. I think really what you want to try to do is to find instruments that you can issue at a premium into the market. And it's also worth noting that the way I see these questions phrased a lot is, I think it almost has the tenor of like, how do you raise as much capital in a down market as in an up market? And the answer is that you don't. You raise more money in an up market than you do in a down market. These markets are cyclical. In a down market, you still do what's available to you in those markets, but it's a cyclical commodity. Bitcoin is very cyclical. Bitcoin treasury companies are very cyclical. And I think a lot of these questions come to the place of like, well, is mNAV going to be stuck at 1x forever? And we really only have one, arguably two long-range historical examples of what happens with mNAV over time. One of those is strategy, and what we saw is it traded at a very healthy multiple during the 2020-21 bull market. In 2022 to 2023, it traded down, traded below 1x. But then when the Bitcoin bull market came back, so did the mNAV. And we've seen Metaplanet has not as much history as Strategy, but more history than any other Bitcoin Treasury company that is currently active. They've been almost on their own little 6-month cycle of volatility. And so I think one of the things that's important to realize is just how much this industry is attached to the movements of Bitcoin. And really just, you have to have a plan for what's going on in these different phases of Bitcoin. And you also have a plan for what happens in different phases of volatility. And, Tier 1 mNAV, you do the best you can with instruments that you can sell at a premium.
Gotcha. And also to what you're saying, when we saw Strategy with a below 1 mNAV in, I do believe that was early 23. So it was like a little bit post the bottom of the bear market that happened in 22. The only tool they had to climb out of that and actually go from below 1 to an mNAV, didn't we see them above 3, I think, in 24, was they had one tool, and that was convertible debt, fiat denominated convertible bonds. And as I like to keep saying on these shows, just 1 year ago, that was the only tool kind of we all knew and understood and were super excited about. Now there's more tools available. But that's based on that alone, they came back very strong and went from what, 100,000 Bitcoin to now 640,000.
Yeah, absolutely. And that was the entire game for like 4 years.
Yeah.
And I think the industry is very different now. For the first 4 years of Strategy, they buying Bitcoin weekly was not a thing. The buyers were sometimes maybe once every couple of months. And we're at a different place now where the industry is moving at a faster pace, or at least it was for a while. It's a little bit slower now. But I think it just goes to underscore the cyclicality of it. And what a Bitcoin Treasury company needs to do is to be in place to take up market opportunities as the market conditions develop.
Yeah. And if we should play it out in terms of, so right now, in fact, let me take a look at and also just share with the audience so most treasury companies today have a display, a dashboard on their website that is targeted understanding all the key metrics of the investment with the Bitcoin per share and everything. And if we just have a look at that, you can see how many Bitcoin H100 holds. And if we go to look for an mNAV, this is not your current mNAV, is it? 0.91?
That is the basic mNAV, just on basic shares. If you scroll down a little bit further.
Yeah, this is what I'm looking for. Diluted mNAV right there.
Yep. And if you calculate it the way Strategy does with enterprise value, it'd actually be higher than that. We're working on adding that to the reporting, but it takes some technical doing. It's something we're looking at. You basically.
So what is it that you? Go ahead. Sorry to interrupt you.
Yeah. So the difference between diluted mNAV and mNAV is calculated based on enterprise value, the way Strategy does it, is that in the numerator you've got basically market cap plus debt minus cash, and that's what you're dividing by the Bitcoin NAV. And just if you did the calculation that way, our mNAV comes out higher than 1.03x, which is what you do if you just calculate it based on diluted shares.
Which means that given enough volume, you can still run the mNAV. Do you have the number? Do you have a ballpark? Is it 1.1, 1.2, something like that? Because that's all you need. And I think that is the most correct fully diluted mNAV to look at when you take everything into account, right? So what would that be? Do you have an idea of where you are at the moment?
It's closer to like 1.3 if you do it that way. I would have to, I don't have the exact number in front of me, but
right, that's fine.
But yeah.
I mean, as long as it's above, let's say 1.1 or 1.15, that means it theoretically should be accretive for you right now to sell more shares into the market, correct?
Yeah, I mean, anything over 1 is theoretically accretive. Of course, you do want to.
Yeah.
You don't necessarily want to ATM or issue shares at literally any mNAV over 1, but any
No.
exact. I'm not going to issue exact guidance around what we're going to do around particular mNAVs, but
No.
yeah, it's at least conceivably an option.
Yeah. But if we play this out for H100, the idea of the fact that, okay, so you are actually, the correct way of looking at it, nicely above 1, maybe or maybe not. You're running the ETM, but even at this level, let's say you want it to be higher to run to sell more shares into the market at a premium, which essentially allows you to buy Bitcoin at a discount. That I think that's a great way of looking at it. That was Hermes Lux that on X that I saw that approach or that way of thinking, which I think is great. But let's say, like Strategy was in a situation where mNAV was below 1, and then they ended up going above 3, basically based on the price of Bitcoin moving up. So if we're looking at, let's say around par, it's around 1, and the price of Bitcoin goes up because you have leverage. And I think it seems you have more leverage than your immediate peers in this ballpark size of treasury company. There's, I do believe SWC and Metaplanet have very little debt. So when the price of Bitcoin moves up, that will force the price of, not force, there's no force, but it would likely mean in practicality that your share price moves up faster than Bitcoin, and that would put back in a higher, like that would push the mNAV higher, which then triggers the ability to sell more shares at a higher premium. Wouldn't that almost happen automatically, theoretically, for someone like H100 when you have 30% leverage? Let's say price of Bitcoin goes to 200,000 over the next 6-12 months. You should be moving up faster because you have leverage, which then would mean your mNAV starts expanding. Wouldn't that, am I missing something here, or is that kind of built into that mathematics?
Yeah, I mean, in principle, that it's a Bitcoin treasury company. It's not a leveraged position in the same way of like buying a call option or buying a perp is. So ultimately the market price is the market price, but in principle, it's correct that a leveraged position should increase faster than non-leveraged position. And I think what we're seeing right now is that the market really is not differentiating between Bitcoin treasury companies at all. It's kind of giving them all the same price, more or less. Kind of most of the companies had a blow off top around the same time. They've experienced roughly the same amount of drawdown. They've arrived at roughly the same amount of mNAV. And there really is no accounting for any difference in either leverage or in execution or in strategy. They're all kind of being lumped under one bucket. Whether or not that will change remains to be seen. But in principle, if you're valuing things correctly, a leverage position, a company, let's say a company that's trading at 1x mNAV today with leverage versus a company trading at 1x mNAV today with no leverage. In principle, the one with leverage should increase faster than the one without leverage, because that's the way leverage is supposed to work. But of course, at the end of the day, the market price is the market price.
Yeah. So I hope for you and for me and for everyone else that Bitcoin doesn't have a 26 bear market, which would be the 4-year cycle. I was discussing that with Jesse Myers from SWC yesterday. My conclusion when we were talking there was kind of, well, even though I've been saying up until yesterday that the 4-year cycle is intact, the fact that we measured in gold still haven't even reached the all-time high from 21, that the 4-year cycle kind of is already broken, because Bitcoin can go up 50% only to reclaim its all-time high, which is usually something that happens 1 year before the blow off top, the last couple of Bitcoin cycles. So where was I going with that? I kind of lost my train of thought there, which wouldn't be the first time. But I don't know if you have any thoughts on
The 4-year
that.
cycle, yeah, I guess it's a common question. Is the 4-year cycle still a thing? And it's one of the questions where until proven otherwise, you always have to at least consider the possibility that it is. But as we've seen, there's a lot that is different about the cycle. The last, I was around for the last 2 cycles during kind of the peak mania phase, and the rallying cry during those times was the institutions are coming, the institutions are coming. And the institutions were not there. The institutions didn't come, but they are here now. And one of the things that looks very different about the price chart is we really haven't seen a similar parabolic blow off top type of movements that most people have probably seen the common chart floating around that shows this neat little channel that looks like a structured institutional bid. And so that is something that is very different about the current market. I think retail really has not shown up yet. And we see that mirrored in our own conversations we have with investors that we see you'll still a lot of interest at the institutional level that is not quite matched with the same fervor at the retail level. And so that's another indicator that perhaps we might not see a typical pricing pattern in Bitcoin like we've seen in the past. But there's alongside that, I think there are expectations of diminishing returns. You can't, you're not going to have 100% CAGR on Bitcoin forever. I think that's not what it's going to look like. But what is it going to look like moving forward? It's tough to say. There's a lot of different thoughts on that. There's the power law. There's tons of different models. Trying to extrapolate out the future of Bitcoin price. Most likely there are some form of diminishing returns, but how long diminishing over what time frame, over how long? Saylor's model, he projects 3% CAGR up to 20 years from now, which I think if you if you anticipate 30.
Did you say 3? Oh, okay. Yeah.
30. Yeah. So if it's
over the next period of decades. Yeah.
Yeah, the next period of 20 years. Yeah. If it's 3% CAGR, then we're all wasting our time here. But 30. That's Saylor's estimate.
Yeah, very conservative, I think. Solid though.
Yeah, and you really have to. You have to be interested in Bitcoin treasury companies. You really have to, I think, fundamentally believe that Bitcoin is going to be, an integral part of the future global financial system. And if it gets there, what does that look like? Parity with gold is a $1 million Bitcoin. It's something that if Bitcoin becomes more than just digital gold, if it becomes used in, say, interbank collateralized lending, if it's if it really starts to demonetize stocks, if you've picked up any personal finance book written in the past probably 30 years, you get one piece of advice: DCA into S&P 500 over a lifetime, and that's it. It's one there's one trick in the book, and I think that is really reflective of the fact that what most people are doing is not investing but saving. They need, but you can't just put your money in a bank account where it gets 0.2% and deflates at inflates. Your loss of purchasing power is ostensibly 3%, but potentially more like 7% per year. You have to put it in some kind of asset. Typically, it's got an S&P 500. If that flips, it goes into Bitcoin. Bitcoin could demonetize a significant part of the S&P 500. If people decide that they would rather hold Bitcoin than real estate as an investment, that there's another vector for funds flowing from real estate investment into Bitcoin. One of my favorite quips is that Bitcoin never called at 2 a.m. asking about to have the toilet fixed. So I am not a real estate investor. I would prefer Bitcoin over real estate every time. That's me.
Me too.
Yeah.
Also, don't own any real estate. I prefer Bitcoin exposure. I mean, Ron DeSantis in Florida, the governor of Florida, tweeted out how, and I completely agree that property tax is I mean, you're not fully owning your home if you have to pay property tax. It is a part of the value of living there that you have to pay rent to the government, and the problem is that you don't know. So like any type of government tends to keep increasing spending, and it's very hard to reduce government programs. So they constantly need more and more money. And one of the things they can do is they can turn up property tax, and have done so historically, and rarely goes the other way. But Ron DeSantis is trying to outlaw that, or I mean, ban it in Florida. And I think that's the right move. But what happens if the political climate changes and then it comes back? Bitcoin and cold storage is unreachable for thirsty governments.
Yeah, I think the flip side of that is there are states today that don't have property tax. If I'm not mistaken, Texas doesn't have property tax. Or no, that's the other way around. They don't have state income tax. They do have property tax. I think there are some states that don't have state property tax. Maybe I'm wrong about that, but the point I'm getting at is that unless the state actually reduces spending, that tax just comes from somewhere else. So there's higher income tax, or there's higher sales tax, there's higher something else tax. The states, Texas actually is the opposite example. They don't have state income tax, but in exchange for that, the property taxes are higher. So in the face of all that, even if okay, there are different places you can live where real estate potentially is a different type of investment, but on the same token, amid all this inflationary pressure, amid all this taxation pressure all adds up to inflationary pressure on the currency, because the government has to print more and more money to pay for that. And so amid all that, I think you're still better off owning a hard asset that is outside of these systems that are going to put that taxation and inflationary pressure on them.
I agree. Great points, Brian. I want to share this with you. Let me just see if I get that on the. Okay, great. I just changed on the share screen. Let me share. So I did a tweet just I think it was 2 days ago or something, and so what I'm looking at here is so there's a bunch of treasury companies that I personally like to keep an eye on, because I do believe that from the investor standpoint, they are the interesting ones. I'm not excited personally, and I'm probably wrong about any of the American treasury companies outside of Strategy itself. I mean, I'm curiously watching, but only Strategy is yielding, but it's also yielding at a level where it's great keeping an eye on it. And I think S&P 500 inclusion is going to be great for them, just like QQQ inclusion was great for them. But let me show you what I'm talking about here. So that's the post where I'm looking at the Q4 BTC yields, and then naturally also as an investor, I look at, well, what do I have to pay as an mNAV premium on these companies? And currently I find these the most interesting. Orange, SWC, MSTR, Metaplanet, H100, and Capital B. Not necessarily in that order, but in terms of this is just ranked on the amount that you guys have yielded so far in this quarter. So this is very much to keep an eye on them, on what I think is really important. And I think I'm really, honestly, really excited to look at the development of this throughout Q4. And different things, I think, play into upsides for you guys. You with more leverage when the Bitcoin price moves, that might really play into your advantage even more so than others. of course, you're all in a different situation. So we're looking forward to, of course, the first H100 announcement of Q4 with more stacking. I know the environment is not easy right now, but I think, yeah.
Okay.
Any thoughts on that, or can you? I know you. I mean, you're publicly traded. You can't tell us when you have anything to announce.
Yeah, so I wouldn't be able to say anything about buys in advance, but I think thinking about the future of different Bitcoin treasury companies, my thesis, and I think also, which is a thesis shared by many, is that there really will be one dominant Bitcoin treasury company, per capital market that's large enough to sustain one. So I think there's maybe 10 capital markets in the world that are large enough to sustain a Bitcoin treasury company. And I think one of the main reasons why that is that for a Bitcoin treasury company to be successful, it really needs to own the liquidity for that segment in its market. And I think one of the open questions about some of the newer companies in the United States is, right now, Strategy really owns that liquidity, and no one else is even close. And some of the difficulties with the pipe structures is that there was enormous issuance, but very little liquidity in those stocks. And liquidity doesn't necessarily increase in proportion to your market cap. Really, in terms, if you're going to run ATM, one of the most critical metrics is not just liquidity, but liquidity in proportion to your market cap. And so somehow you need both of those things to grow together. And if you launch at scale, then you've kind of got one piece you need for capital markets access, but the liquidity also needs to follow that. And so I think that those are some challenges that remain for newer companies. They're kind of competing for a number 2 or 3 or 4 slot. But in other markets, the picture is a little bit different. If you're in Sweden or the Nordics or Japan or the UK, you could potentially own your own market liquidity and not have to be in direct competition with Strategy for that. So, and I think there's also just a desire for people really want to see companies in their home market succeed. There's a very strong home market bias. I think one of the things we saw with the international Bitcoin treasury companies in particular is that when they started springing up, everybody was very excited to see their own homegrown version of Strategy in their country, and given the option, given even ballpark similar options, many investors will simply prefer the company that's in their own home market that is really a home team play. So in general, I hold Bitcoin treasury companies myself. I'm generally more bullish on ones that are in a position to own their home market liquidity.
I personally, yeah. So I spoke with Jesse about that yesterday when I did a show on SWC, and first time I heard winner takes most, it was from Jesse. I think he said he had it from somewhere else, but I'm a strong proponent to the mechanics, the nature of the markets, and how credibility, credit worthiness, and all of that, it really, I think, plays into winner takes most in each market. And you said, which I think is really great, Brian, a while back, that the credit market, which is very important for treasury companies, because that is how they can offer for credit and raise funds to buy more Bitcoin per share. The credit market very much is local. A bunch of reasons for that. There is the jurisdictional area, so there's local indexes or local regulation that says, well, you are a Swedish bond, pension fund, you need to buy Swedish credit products. Then there's the currency that we've spoken about previously as well, where, well, a lot don't want to move outside the local currency because that currency is because then you add risk up and downside, but still risk and a factor that is outside of control. But then, as you said, at the same time, the equity itself is a global market. And I think it very well just explains how, someone like me who is a Dane but sitting in the US can find it interesting to hold H100 share, even though, I because I see the local credit market is something that H100, at least for Sweden, likely will have corner, given you are a winner takes most at the moment, at least, and I think probably forever. But and do you have
Yeah,
any?
yeah, kind of like lesson one of marketing is differentiate or die, and the just being located in a different jurisdiction in and of itself is a differentiator. If you are a company, say United States, saying, okay, we're going to do preferred stocks just like strategy, um, that is a very different proposition than it's an actual literal Me Too product. They're going to have to find some way to compete with strategy on that, whether it's on, most likely it's going to be on the rate. They'll just have to offer more attractive rates. Realistically, that's what it's going to have to be. But in a different jurisdiction, that's not necessarily the case. If we were to launch a product into the Nordics, we're not in direct competition with strategy. Anything we would do in the local fixed income markets, we could do in the local currency, and it would follow the same tax rules of the local jurisdiction. And for that's for the fixed income products themselves. But for the equity, you're thinking about if you're interested in investing in a company that accumulates Bitcoin via fixed income products, the properties of the market itself are interesting. One thing something I always like to highlight is that Sweden has one of the lowest interest rates in the developed world. The benchmark rate in Sweden is 1.75% versus the Fed funds rate of 4 to 4.25%. It's substantially lower. So if you're an equity investor, you might not necessarily be participating in the fixed income products, but directly. But when you're thinking about what is interesting to you, the properties, a company that is able to accumulate Bitcoin based on the properties of its local fixed income market, are potentially interesting as a differentiator in a way that they would not be when looking at two companies operating in the same market.
Gotcha. Makes sense. Whenever you guys talk about, or people in general talk about the interest rate in the local market, which you make a good point with, I always think, yeah, but also what about the real interest rate? The money supply dilution that each country is facing, and I do believe that would probably further speak to Sweden. I as a Dane, having one of my best friends is Swedish. I've seen how the Swedish crown has deteriorated compared to the Danish. I remember when we met in high school, the Swedish crown was actually worth more than the Danish, and so was the Norwegian crown. But both of them have lost a lot of value now to the Danish. So that would like if you're in a currency that loses value because of, it can be money printing, it can be just structurally in the country lack of growth or whatever. That would only further play into the attractiveness of the local market for credit products. Would you agree, or is that actually irrelevant because they will always just look at what can we get in return for our money?
Well, yeah, I mean, practically speaking, it's definitely both those components are important because it's it's right to also highlight the currency because if you sell whatever product you're selling, you're buying a Bitcoin at whatever that point in time is, and so when you're measuring performance as measured against the currency that you bought it in, if that currency is depreciating, then at a faster rate than another currency, it's going to look like Bitcoin is going up higher in that currency. And if what you've done is you've issued a liability in that currency, then the value of that liability is decreasing faster than it would be in another currency that's not as inflating quite as rapidly. And if you add further on top of that, potentially, if you have a currency that's depreciating more, and you've got a lower interest rate on top of that, that's the magic combination.
Yeah, and I guess the reason I started thinking about that is my position with Orange in Brazil, which has a high inflation, and that inflation you need to take into account when people are looking at, well, should I just keep the local currency and get a yield, or do I need to buy something else? So I guess this also plays into the attractiveness of the equity. So Brian, once again, good to see you. It's been great getting to know you and have you as a friend since first you came on the show many times, talking about some of the other treasury companies in the space, and then you got the position with H100. So now I get to interview my friend directly at the company, which is awesome. Is there any final words, anything you want to share further? And thank you for sharing that presentation initially in the stream.
So, thanks again for the warm welcome to the show. I always enjoy coming on your show. I think you're one of the best moderators in the business. So
Thank you.
Always happy to talk to Anders. And I think what I would say, right now, sentiment, it's awful, but every day I wake up and I thesis check two things. One, do I believe that Bitcoin is going to be an integral part of the future global financial system? And two, do I think the rate of appreciation of Bitcoin is going to substantially exceed interest rates for the actionable future? Future. It sounded like I said future when I said it in the future. But if both those things are true, then I'm building in the right direction. I'm doing the right thing to position for that. Bitcoin Treasury Company is doing the right thing to position for that. H100 is doing the right thing to position for that. So regardless of what current market sentiment is, if one believes those two facts to be true, then I think that over time, Bitcoin Treasury Company is the best place for me to be putting in my efforts, and I'm very happy to be building what we're building at H100.
Absolutely, that's a great point, Brian. Good things to check in for, and I will say, even though a lot of my former fellow bulls, I don't know if my people can understand what I'm saying with my accent, but bulls have defected or lost their bullishness and are doubting the model of treasury companies. I must say mine is completely intact, and thinking a lot about, well, is it possible to be stuck at mNAV 1, and then it now is hard to get out of it? And I could be wrong, but I still think that it's a shift in sentiment, which is down right now. And I do believe that it doesn't mean that the gravity is so strong that you can't get out, for some of the reasons that we've discussed, the tools that are available, the fact that you can offer at a no risk of being stopped out, leveraged upside when Bitcoin moves. And to me, that's why treasury companies are still super attractive. And I could be wrong. I've made mistakes before, but I'm still here in this space, heavily invested, and I'm bullish. And what better entry level than low? So we'll see how it goes. But I'm looking forward to have you back on. I'm looking forward to having Sander back on and follow the industry here. I believe in the future. So, all right. Thank you everyone for watching. There is across the two platforms, X and YouTube, almost 500 live viewers. Thank you very much, guys, for following or watching, and thanks for your time. Thanks for your questions in the chat. And thank you to you, Brian, for coming on. I appreciate it, and looking forward to having you on again. And have a great day, everyone.
Thanks to all 500 people for listening. Happy to talk about H100 Bitcoin today.
All right. Thank you, guys. See you on the